Okay, again, this is a repeat performance. Okay, about responsibility accounting from the top. Okay, uulitin ko, this is a repeat performance about responsibility accounting. Sa mga bago dyan na subscribers ko, charot, okay, or mga nagnunood, pagpasensyahan nyo lang, wala po akong bukang maiprepresent sa inyo. Okay, kung may mga katanungan po kayo tungkol sa aking topic for today, mga mga kabarangay ko dyan, mga estudyante ko dyan, okay, alam nyo na kung saan ako makokontak. So, okay, let's begin. In this clip, we are going to continue our discussion in responsibility accounting, particularly on remaining topics about performance evaluation tools. In my previous video clip about responsibility accounting, I have discussed there the definition of responsibility accounting, the different responsibility centers, and I also provided you a computation of the first performance evaluation technique that I presented, which is the return on investment technique on evaluating responsibility centers. For this clip, I will discuss about other remaining performance evaluation tools. And I will also include discussions about classification of cost on responsibility centers and to whom performance report is being presented. Okay, so let us begin with the second performance evaluation tool, namely the computation for the residual income. Residual income is the excess income generated more than rate of return. From the definition, we can express it in an equation which is residual value as the operating income less the minimum rate of return. Well, it is clearly presented in the PowerPoint that it is operating income minus minimum rate of return. I know you are now asking, what is the minimum rate of return? Well, we can easily understand what is minimum rate of return using the example provided. Assuming ABC Corporation target rate of return for the year is 5% and the total assets of the company is 500,000 pesos. At the end of the current year, the operating income earned by the company is around 43,000 pesos. We are required to compute the residual value or the residual income of the company. Well, the first thing we need to do is to determine the minimum rate of return. That is 5% of the total assets. So, we can say that the minimum rate of return is being computed using the rate of return multiplying it to the total assets of the company. So in this particular case, that is 500,000 times 5%. The minimum rate of return in terms of pesos is 25,000 pesos. But it's not yet the residual income. It's just the minimum rate of return that we are going to use later on in the computation of the residual income. Considering that the operating income is 43,000 and the residual and the minimum rate of return is 25,000, we can say that the residual income is 20,000 pesos because 45,000 operating income minus the minimum rate of return that we have computed, we will come up the 20,000 pesos residual income. Okay, how are we going to interpret that? Considering that the residual income is positive, we can immediately interpret that the company is earning much and we can conclude that the company is performing well. Well, that's correct. If the company's residual income is negative value, it means the company is not profitable, even if we deduct the minimum rate of return to a positive operating income. O bakit po sinabing ganito? That if we have a residual income that is negative, we cannot easily conclude that the company is profitable. Kasi nga, isipin nyo, if the minimum rate of return is around 25,000 pesos and then the operating income is still at a positive level but it is less than the minimum rate of return, our target income for the current period wasn't able to achieve. Or ibig sabihin, hindi po natin na-achieve yun, hindi po natin na-target. Ibig sabihin pa rin, we are not totally earning kasi we have a target return na dapat i-achieve. So that's it. So yun po yung ibig sabihin ng residual income. Or yun po yung maibibigay na interpretasyon on the residual income. The next one is we will focus on the last performance evaluation tool na masyadong mas mahaba siya. Yung tinatawag po nating Economic Value Added or EVA. Okay. The Economic Value Added or EVA is a more specific version of the residual income that measures the investment center's real economic gains. Compared to ordinary computation of residual income, okay, the Economic Value Added uses the weighted average cost of capital to compute for the required minimum rate of return or the required or targeted income. Ngayon, tatanungin nyo ako, how are we going to compute the weighted average cost of capital? Well, we will discuss it profoundly. Profoundly pa, tama ba yung term? Or, i-discuss ko siya ng mas malawak sa example na ibibigay ko. Okay? Well, but going back to the slide, take note, the minimum rate of return is based on the weighted average cost of capital, and that is the total assets of the company minus current liabilities. Take note, yung ibabawas po natin current liabilities, not the total liabilities, the net of which shall be multiplied to the weighted average cost of capital. Ngayon, yung problema po natin dito is how are we going to compute the weighted average cost of capital? Madali lang sana if the problem provided in the actual CPA board exam, binigay na agad yung weighted average cost of capital. Kaso meron po tayong mga examiner that we are required first to compute for the weighted average cost of capital before coming up or before computing the economic value added na mas madali lang naman sagutin. So, ngayon, I have an example. Okay? The company cost of capital includes the following. Okay, we have bonds, we have preference shares, ordinary shares, and it has its corresponding market values, flotation costs, and expected growth rate. Okay, so tatanungin, sir, bakit hindi po isinama yung retained earnings? Mamaya masasagot po natin yan as we go on. Sorry. Sorry lang po. As we go on this particular example. Okay. Furthermore, the company provided information related to income statement. The income after tax, then take note the tax rate for this is 30%, is equals to 14 million pesos. And the current dividend per ordinary shares is 3 pesos. The total assets presented in the balance sheet is 135,000 pesos. And the current liabilities is equal to 25 million pesos. Okay. So we are required to compute for the economic value added. But before we can proceed to the economic value added, problema nga po natin yung weighted average cost of capital. Kaya yung una po dapat natin gagawin is to compute for the weighted average cost of capital particularly in this problem. How are we going to compute the weighted average cost of capital? Una po natin gagawin is compute po natin yung cost of debt. Okay? Para ma-compute po yung cost of debt, we are required to compute the effective interest rate of bonds payable. Okay? Assuming that the par value per bond is 1,000 pesos and the market value of the bond is 1,250 pesos per bond, how are we going to compute for the effective interest rate? Well, going back to the problem, the nominal rate of the bond is 10%. Okay, we need to determine what is 10% of the par value. So that is 1,000 par value per bond multiplied by 10% nominal rate of the bonds. That is equal to 100 pesos. Then later on, we are going to use the market value of the bond, which is 1,250 pesos. Then multiply it to the net of flotation cost. Kaya nga po, 100% is constant because it means 100% of 1,250. Kaso ibabawas po natin yung flotation cost, that is 5%. So that is 100% minus 5%. So yung kukunin lang po nating value is 95% of the 1,250 pesos. Okay, which is equivalent to 1,187.50. Using those two figures, we can easily determine the effective interest rate, which is 100 pesos over 1,187.5. Then multiply it by 100% para ma-convert po siya into percentage. So, the effective interest rate of the bond is 8.42%. Take note, this is not yet the cost of debt. This is just the effective interest rate. The effective interest rate, gagamitin po natin yan for the computation for the cost of debt. To compute the cost of debt, which will be used later on, and for the computation of the weighted average cost of capital, that is 8.42%, which is the effective interest rate, multiply it by 70%. Bakit 70%? Because we need the 8.42% a net of tax para malaman yung cost of debt. So, 8.42% multiplied by 70%, that is 5.89%. So, yun po yung cost of debt. Hindi pa po yun yung weighted average cost of capital. Itong cost na to is referring pa lang to the debt, which is the bonds payable in this particular problem. Take note the cost of debt. Gagamitin po natin yan later on. Then, ngayon, kasi meron pong ipangalawang source of fund, which is the preferred shares, we will compute naman the cost of the preferred shares. So, determine the value of dividends per share. Assuming the par value and market value per preference share is 100 and 250 pesos respectively, how are we going to determine the value of the dividend per preference share? Considering that the rate attached to the preference share is 15% and the par value of each share is 100, we can easily say that in every preference share, the dividend is 15 pesos. Paano po na-compute yung 15 pesos na yon? That is 100 par value per share multiplied by 15% rate of the preference share. So that is 15 pesos. Okay, ngayon 15 pesos na po yan gagamitin po natin to compute for the cost of preference shares, which is the 15 pesos will serve as the numerator and then we will divide it to the market value, which is the market value after deducting the flotation cost. Okay, take note that 250 is at 100%, so we need to determine what is the net of 5% of the market value. So that's why the 100% minus 5%, that is the net of the flotation cost. So once we multiply that 95% to the 250,000, we can immediately determine the value, the market value the preference shares after tama ba yung excluding? O sabihin natin, after deducting the flotation cost. So, 15 pesos, divide it, computin nga natin kung magkano yun. 250 multiply by 950, magkano kaya? Sige nga, pakigamit mo nga po yung mga calculator nyo dyan. Kasi, nahihirapan akong mag-calculate dito. Teka lang ha, kukumputin ko. Maghanap lang ako ng calculator. That is 250 multiplied by 95%. Okay? That is equal to, okay, that is 237.5. So, 15 pesos divided by 237.5, that is 6.32%. So, our cost of preference share is 6.32%. Okay, again ha, inuulit po natin, itong cost na to, hindi po paputo yung weighted average cost of capital. This is just the cost of the preference shares na gagamitin po natin later on in the computation of the weighted average cost of capital. Ang haba ng solution on the economic value added. Nangyayari lang po tong kay haba-haba yung solution pag yung problem will not provide immediately the weighted average cost of capital. Okay? Well, next, third, let us compute for the cost of ordinary share kasi isa rin naman po siya na source of funds or part po siya ng cost of capital. To compute for the cost of ordinary share, assuming the par value and the market value per share is 20 and 40 pesos respectively. Okay, how are we going to compute that? Easy. Easy lang. Easy kasi meron po akong tinitignan. So, okay. Well, we will use the 3 pesos dividends per ordinary shares and then we will multiply it to 108%. Bakit po multiply po natin to 108%? Kasi gusto natin makita what would be the dividend if meron pong growth later on. Kaya nga po, from the 100%, nagdadagdag po tayo ng 8% na growth rate. So we are expecting that the dividends will grow by 0.24 cents. So that's why that is 3.24 at gagamitin po natin yan later on determining the cost of the ordinary shares. And then, sunod po natin, gagamitin naman po natin yung market value per share which is 40 pesos pero kukunin po natin yung, hindi po yung buong 40 pesos. In this case, kasi may flotation cost attributed on the particular problem related to the ordinary shares. So, we need to deduct the flotation cost attached to that market value of 40 pesos. Kaya nga, the 40 pesos, multiply it to 93%. Bakit naging 93%? Kasi 100% ngayong 40, babawasan ng 7%, naging 93 na lang. So, ano ang katumbas ng 93%? That is 37.2. So, ngayon, na-compute na po natin yung dalawang importanteng bagay para ma-compute yung cost of ordinary share. That is the dividend per share as expected, which is 3.24 over the market value of the ordinary share after deducting the flotation cost, and then we need to add the growth rate, which is 8% in this case. So, pag i-compute po natin yon, 3.24 divide by 37.2, please kindly use your calculator sa mga nakikinig. That is 0.087097 or equivalent to, sabihin natin, 8.71%. Kung walang growth rate, yun na, sana. Kaso may growth rate po tayo, we need to consider that because we are expecting na tataas rin naman yan. So, the cost of ordinary share will be 16.71%. O, ngayon, tatanungin nyo na naman ako, bakit wala po nyo yung retained earnings? Part din naman po siya ng capital. Usually, the computation of the cost of ordinary shares and retained earnings are the same. So, may tendency po na magkakapareho din po sila. Kaya hindi ko na rin po nilagay yung computation ng cost of retained earnings. Okay? And then anyways, the problem did not provide any value of the retained earnings. Okay? So, ngayon, ano po sunod na gagawin natin? Sunod po natin gagawin is that compute na po natin yung weighted average cost of capital. Haba-haba, bago pa tayo nakapunta. Pero hindi pa po tayo totally makakapunta sa weighted average cost of capital. Una po natin gagawin is hanapin yung mga market values ng bawat ng funds, sources of funds. In this case, the bonds payable has 50 million, the preference share has 25 million, the ordinary shares is having 100 million at its market value. The total market value of the sources of fund is 175 million. Using those figures, we can prepare the ratio for each source of funds. So, ineliminate ko na po yung mga zeros. So, the ratio for bonds, that is 50 over 175. The preference shares, 25 over 175. The ordinary shares is 100 over 175. Ito pong mga ratio na to, ito na po yung weight. Weight. Ibig sabihin, bigat ng bawat cost. Okay, ng sources of fund para makompute po natin yung weighted average cost of capital. Okay, so dahil kumpleto na, we can now compute for the weighted average cost of capital. Okay, finally, let us compute for the weighted average cost of capital. That is the individual cost multiply the ratio equals to the weight. For the bond, okay, looking back, no? Okay, i-backtrack nyo na lang. Okay, the bonds payable has 5.89% individual cost, while the preference share has 6.32 and the ordinary share has 16.71. We need to multiply it based on the ratio na nagawa natin on the previous slide. Kasi yun yung weight niya. So, 5.89 multiplied by 50 over 175, ibig sabihin yung contribution ng bonds payable from the weighted average cost of capital is 1.68. Same with the preference share, 6.32% multiplied by 25 over 175, that is 0.9. Ordinary shares, 16.71 multiplied by 100 over 175, that is 9.55. So, i-add po natin yung 1.68, 0.9, and then 9.55. We can say the total weighted average cost of capital is 12.13. O yun ha, na-compute na po natin yung total weighted average cost of capital. Aray, hinihingal na kini. Okay, so let's continue. Again, hindi pa po yun yung economic value added. Tinapos muna po natin computein yung weighted average cost of capital kasi importante po yun in the computation of the economic value added. Ngayon, gamitin na po natin sa problem gamitin na po natin in the computation of the economic value added. The operating income after tax minus minimum rate of return is the economic value added. Inuulit ko, that is the operating income after tax minus the minimum rate of return. Kaso the minimum rate of return here on EVA is based on the weighted average cost of capital. Kaya nga, kinumpute muna natin yung weighted average cost of capital. Okay. If we are going to recall, no, the total asset of the company is 135 million pesos. And then, we need to deduct the current liabilities. Not the total liabilities, the current liabilities. 135 million pesos total assets minus 25 million current liabilities. It is equals to 110 million pesos. And then, meron po tayong na-compute na 12.13% na weighted average cost of capital. We need to multiply it, from the net, yung total asset net of the current liabilities na 110 million pesos, lalabas po that the minimum rate of return is 13,343,000. And finally, matatapos na rin yung problem na to. We can now compute for the economic value added. The problem provides that the income after tax is 14 million. So, yung 14 million pong yun na nakalagay po sa problem, nakabawas na yung tax na 30%. So, wala na po tayong problema doon. And then, we need to deduct the minimum rate of return na 13,343,000. So, we can say that the economic value added is 657,000 positive. Okay? Positive value. Hindi positive sa COVID. Charot. Okay. Sige. Ano po ba ang indication or interpretation nito? Well, sabi nga po natin that the economic value added is same with the residual income, pero mas specific lang siya kasi ginamit po yung weighted average cost of capital. The same rin in the explanation that if positive, we can immediately interpret the company is earning much and we can conclude that the company is performing well. If the company's residual income is negative value, it means the company is not profitable even if we deduct the minimum rate of return to positive operating income. Yun, same explanation lang. Wag nyo na akong paulitin doon. So, tapos na po ako sa performance evaluation tools. Ngayon, pag-usapan po naman natin yung classification of cost. Okay? In your other accounting subject, kung hindi ako nagkakamali on cost accounting, marami pong classification of cost. Pero, in relation to responsibility accounting, dalawa lang po ang kinukonsider po natin. Okay? Hindi ko sinasabing wala na po yung ibang cost. In responsibility accounting lang, we have the controllable cost and the non-controllable cost. Okay, a short recap. Pag sinasabing controllable cost are those items of cost that may be directly regulated at lower levels of management. This type of costs are usually segregated based on its nature. Usual examples of these costs are advertising costs, employee compensations, donations, dues and subscriptions, office supplies, training costs, direct materials, direct labors, and so on. As long as it is directly regulated, as long as that cost is directly regulated at lower levels of management. While the non-controllable costs are costs that cannot be regulated at a particular level of management other than the top level. Ibig sabihin po nun, yung nakakakontrol lang po dun is yung top level management. Okay? Ganun. Okay? Ganun lang po ang pagkakaiba nun. Okay? And then, okay? So far, yun lang naman. Pero pag tatanungin nyo ako, sir, di ba kasi kung merong pong other than, yung sinasabing other than the top level, ibig sabihin controllable cost pa rin po yun. Yes, kaya nga, pwede natin i-conclude, generally, lahat ng costs are controllable. Sadyang, the controllable cost, para magkaroon lang po siya ng konting difference, the controllable costs are regulated by lower levels of management, while the non-controllable costs, it cannot be regulated by a particular level of management except for the top level. Yun lang po. Okay? Sige. Okay, nasa last topic na po tayo on responsibility accounting, the preparation of performance report. Okay, the performance report is furnished by each center and reported to the appropriate level of management. And this is the end product of the responsibility accounting process. The report usually provide a comparison of actual and budgeted or targeted, okay, with interpretation of the variances, especially the cause of such variance. So, ibig sabihin po yung report na maibibigay usually will provide a comparison of the actual versus the budget or the targeted or the standard cost. And then, it will also provide explanation about variances, particularly saan galing yung variance, ano yung cost, bakit nagkaroon ng variance. And then take note, hindi lang po unfavorable variance ang dapat ma-explain, including the favorable variances. Okay? Because this report is not for external reporting, no standard is being followed as to how the performance report should look like. Nawala ang look na word. Take note, should look like. As long as it will provide information about the performance of each responsibility center and comprehensible to readers, it is acceptable. Parang busog ako talaga. Well, anyways, tapos na po. That ends our discussion for responsibility accounting. Again, kung may mga tanong, may mga debate, alam nyo na kung saan ako mahanap. Okay? Yung nakakakilala sa akin, alam nyo na rin. Thank you and God bless us.